Good morning and welcome to Forward Markets by FBN Crop Marketing. My name is Brian Como. Today is August the 24th. All right, today we're going to talk a little bit about the markets and how they're trading along with ProFarmer, but we definitely have crop conditions in the wings at this point as the market is also bracing for what might come down the pipe on Monday from the USDA. So let's get into what's going on in the markets today. We'll start off with futures values. We've got a little bit of a lower tone to today's markets. We've got corn down 4.25 at 486 and a quarter this morning. We've got Chicago wheat down 4 at $6.35. We've got Kansas wheat down 5.25 at 758 and a half. Spring wheat or Minneapolis wheat is down 1.25 at $8.02. Soybeans are down 2.5 at 1363. Canola is down $5.90 to almost 800 on the November. Soybean oil is down about 1% today at 62.36. Soy meal is up about 1.2% at $405.90 a short ton. We're going to talk about the relationship of those two in a bit. We've got crude oil down pretty good today at 78.30. The US dollar index is higher on some of the risk off trade at 103.85. The Canadian dollar is off to 73.74. We've got a bit of a mixed tone in the stock markets today. Nvidia leading some of the way on the tech sector with the Nasdaq up almost 1% at 15,340. S&P up at 44.66, and the Dow is losing some ground today at 34,467. All right, Illinois soy and corn seen above average according to the ProFarmer Tour. Illinois soybean pod counts and corn yield prospects are above last year, and all three and the 3-year average. Scouts on the annual Midwest Crop Tour found on Wednesday. Illinois corn yields were projected at 193.72, above the 2022 Crop Tour average of 190.7, and the 3-year average of the Crop Tour at 192.14. Soybean pods in Illinois, which is the top producing state, were an average of 1270.6 in the 3x3, which is up from last year's average of 1249 and the 3-year average of 1258. Corn prices have been falling on expectations of strong U.S. crop and uncertain demand. Hot and dry weather this week has been stressing crops, particularly soybeans, which rely on August rains to realize yield potential. So we're going to go into a little bit of weather here. This is kind of a big top-down overview of the heat dome in North America at this time. You can see along the Delta and in many of the stronger soybean growing areas, extreme amount of heat this week. It is starting to dissipate now as we move towards the weekend, but this week has largely been above average temperatures, stressing the crops, particularly because there hasn't been a lot of rain as well. There isn't a lot of rain continued in the forecast, some very light rains in the Delta region, but the Midwest is relatively going to be left dry for the most part. Illinois to see a sprinkling as well. We do see some rain into, I'm going to zoom in a little bit here. Here's the U.S. Midwest. We do see some rains in Illinois, but they are relatively patchy. And then down the Delta as well, there are some rains. That might help alleviate some of that concern, but still the amounts here don't even amount to an inch in this 5-day forecast. So I think the heat is going to trump that for sure. Here's what the Canadian prairies looks like. Some of that rain from the western part of Alberta is moving across the central region. Not the strongest agriculture growing areas here are receiving the rain. Some in the Interlake and Manitoba are receiving some light rains, but the rest of the Canadian prairies is relatively left dry for the next 5 days or so, according to this forecast. As far as exports things go, Brazil does clear bottlenecks to oust U.S. as top corn exporter. Brazil is set to overtake the U.S. this year as the world's top corn exporter, reflecting both a bumper harvest and logistical breakthroughs such as the consolidation of northern export routes, which are boosting the competitiveness of the South American grain powerhouse. Corn exports through Brazil's northern ports, which use the waterways of the Amazon River Basin to ship grain globally, are on track to beat volumes by the most traditional port of Santos for a third consecutive year, at least according to a Reuters analyst of grain shipping data. The shift underscores how Brazil, which churns out 3 corn crops per year and still has huge expanses of underused farmland, is finally overcoming some of the infrastructure bottlenecks that have long made it hard to get the bountiful harvests to global markets. That and a new supply deal with China announced last week suggest Brazil may be opening a longer era of supremacy over U.S. corn exports, unlike the last time the Brazilians briefly grabbed the global crown during the drought that hit North America in 2012 and 2013 season. The improved export capacity helped Brazil to fill gaps in the global corn market amid disruptions from the war in major grain exporter Ukraine and trade tensions between the U.S. and China. So whether it's trade rows or actual military conflicts, Brazil is taking advantage wholeheartedly. Here's what the corn market looks like today. So we saw some pressure in corn as we moved through the period which saw increasing crop condition ratings. We've seen it bottom out now at about 473. We've kind of seen a double test of that support level 473. It's bounced a little bit. We're still trading under the 20-day moving average, as you can see down here on this chart. So we're still near recent lows, but I think for the short term anyway, it looks like we found the low for corn. Just to kind of give you an idea, jumping back to Brazil here, export commitments. This is also in a note from AgResource, which is a US-based consultancy service. I want to make sure that I'm sourcing or giving sources credit where they're due here. They stated that Brazilian corn export commitments as of August 18th totaled a record 25 million tons, which is up 3 million tons in the past week alone, and already 44% of the USDA's annual forecast. Chinese demand for Brazilian origin corn has been excellent since midsummer. Pace analysis implies Brazil's corn surplus will be completely accounted for by mid-November. Recall spot Brazilian FOB basis has rallied about $1.30 since June, despite the record production because of the amount of demand. So the market is definitely being fed by corn, and it's rapidly coming out of Brazil is the story here. Here's the soybean market this morning. From a charting perspective, as you can see, we've seen a bounce since through the month of August. We're trading kind of back close towards the highs of August, back above 1360 now. But what's interesting to me is what's happening now between the relationship between soybean oil and soybean meal. So a couple of days ago, where we've been talking about how the value of soy oil surged to about 45.5% of the soybean crush. That's now coming back into, the normals that we've seen through the summer at about 43%. That's on both on a fall of soybean oil and a rise in soybean meal. So that's interesting, particularly when we look at the bean oil market. Particularly here, we've seen a double top recently, which is a bit of a potential bearish turnaround sign in the oil market. So something to be aware of here, particularly on the oilseed side. We'll get into that a little bit on canola for our Canadian customers here. Dalian soybean oil is actually another interesting vegetable oil as we come out of the day today. It surged overnight to about 8,600 renminbi or won on the Dalian soybean oil exchange. Now, some of this can be accounted for, some of the rally, I guess, in Dalian oil can be accounted for by a falling renminbi as the won touched new lows on Thursday. However, today's move is largely done on a day when the won actually did some strengthening and is not following a corresponding drop in the currency values, which signals that there's probably some buying interest here for bean oil in China. And it might be just some bargain hunting as the price in US dollars is reaching some attractive levels. As this relates to canola's trading pattern this week has left a little to be desired. Even with worsening drought conditions, canola has not been able to best the July rally, although there is little harvest to have occurred yet. I think we will see markets rally if yields start coming in more disappointing than the market had already been pricing in. There's also an upcoming Canadian production report out on the 29th, which is usually highly inaccurate, but will highlight some possible directional bias. The average estimate for canola is about 17.4 million tons, and I think that works out to about 35.2 or 35.4 bushels per acre as an average, if you use kind of average abandonment, acreage abandonment from seeded to harvested. So that's kind of what we're looking at going forward. That is all we have for you this morning. Hope you have a great day, and we'll see you again tomorrow.